Hello, everyone, and welcome back to our Phillip Trading Podcast. My name is Liao, and today we have Trent with us. This week we will talk about will crude oil price drop further. So, as we all know, the oil prices has extended their slide. That it has dropped, led by lower worries that the global economy would slow further. And in addition, the Joint Technical Committee of the OPEC, Organization of the Petroleum Exporting Countries, and their allies, the OPEC Plus, said it now sees an oil surplus this year of 400,000 barrels per day, up 100,000 per barrel per day from its forecast a month earlier. Today Trent will talk us through about what he thinks about the crude oil. So the first question for Trent is that can you tell us what had been going on in the crude oil market and what are the factors that caused a drop in crude oil recently?
Thanks, Liao. Okay, so oil prices actually dropped since last week as investors were worried that there will be aggressive interest rate hike from global policymakers, which would slow economies and also then fuel demand, right? While there is renewed restriction of the COVID-19 restriction in China, which also added pressure for the oil prices. So for the Brent in the oil market, Brent crude futures fell to $95 per barrel, while the US West Texas Intermediate, which is short form WTI crude oil, slide to US $88 a barrel. Okay. So there is growing fears over the weakening fuel demand due to aggressive rate hikes by the US and also European central banks, which have outweighed the concerns of global tightening supply. In addition, in the recent signs of weakness in China's economy and also the country's stronger pandemic restrictions also weigh on the sentiment. In fact, the China's factory activity has contracted for the first time in 3 months in August due to weakening demand and also the power shortages and fresh COVID-19 flare-ups has also disrupted the production in China. In fact, the southern Chinese tech hub, which is Shenzhen, had tightened COVID-19 curbs as cases continue to mount, with large events and outdoor entertainment suspended for 3 days in the city's most popular district, the Bao'an. On the other hand, the production in both of the OPEC and the US has risen to its highest level since the early days of the pandemic, despite the recent oil market volatility on concerns about inadequate supply in the months after Russia sent military forces to Ukraine. The OPEC's output also hit 29.6 million barrels per day in the most recent month, according to a Reuters survey, while US output rose to 11.82 million barrels per day in June. Both also are at the record level, which is highest since April 2020. So all these factors combined with lower demand and also increased supply had contributed to the drop of the crude oil prices.
Okay, yeah, so indeed, these are the factors that has caused the crude oil market to kind of drop recently. Okay, so second questions to you, Trent. So can you guide us through what are the data that traders should pay attention to? So data like crude oil stockpile or output data, etc.
Okay, so for crude oil traders, there are few key indicators on supply and demand data that they need to monitor closely. First one is the US crude oil inventories, which is released on Wednesday, Malaysia time on Wednesday, 10:30 p.m. These crude oil inventories will show the change of the number of barrels of crude oil held in inventory by commercial firms during the past week. Then the second crude oil data will be US API Weekly Statistical Bulletin, which is released on Tuesday, 4:30 a.m. Malaysia time. This report provides insights about the supply and demand imbalances in the market, which can lead to changes in production level and so significant price volatility. And the third one will be the US Baker Hughes oil rig count on released on Saturday at 1 a.m. Malaysia time in the morning. So it will show the number of drilling rigs actively exploring and developing oil in the US. Okay, then other general indicators may include some economic indicators such as the US Consumer Price Index and US non-farm payroll, which usually cause some significant volatility in the oil market when it's released.
Okay, yeah. So these are the four important data for traders, okay, who try to trade in the crude oil market. Okay, so next questions. So is there anything that the traders should look out for when trading in the crude oil market?
Okay, so traders should look out for the upcoming OPEC Plus monthly meeting on 5 September. Okay, the OPEC Plus may announce an output cut due to the fear of China's COVID-19 curbs and also weak global growth, which I mentioned early. Okay, OPEC Plus this week might slash its demand out. OPEC Plus this week has already announced that they will slash their demand outlook, now forecasting demand to lag supply by about 400,000 barrels per day in 2022. But however, it expects a market deficit of 300,000 barrels per day in its base case for 2023. However, it might be too far for the OPEC Plus to agree to cut output as the top producer. Saudi Arabia will likely highlight what it sees as a disconnect between current prices and tight supply fundamentals. And also the Saudi Arabia's own numbers show that there is a tighter than expected market, and they would also want more clarity on the uranium supply before making any big changes to output policy. So that's sort of like dilemma for the OPEC Plus currently. So traders should really look out for the output policy of the OPEC Plus, which will likely cause significant effect on the oil market.
Okay, yeah, thank you. So yeah, last question for you, Trent. So how can trader capitalize the opportunities in the crude oil market?
Okay, so for WTI crude oil, traders may consider the semi-micro crude oil futures contract. It's actually 1/10 fraction of its existing standard crude oil futures contract. Hence, traders with smaller capital can now participate in the crude oil market. And apart from that, for Brent crude oil, traders can go for the ICE Singapore Mini Brent crude oil futures. It's a newly released mini contract designed for retail traders to participate in the crude oil market. So for more details, you can contact our representative from Phillip Capital to learn more on the futures contract.
Okay, yeah, thank you, Trent. So yeah, for the traders who would like to trade in the crude oil market, don't forget what Trent has just mentioned on the small type of futures contract for the crude oil. Okay, so which is very, very affordable to trade. Okay, so for those of you who are interested, you can also look up our website where we have the $3 promotion for the crude oil futures. Okay. So this is our podcast has come to the end. So thank you, Trent, for being with us today. Thank you.
Thank you.
Thank you, everyone. Have a good day. Have a good week ahead. Bye-bye.